Hi everyone and welcome to this week's market commentary. Hope you're all doing well, had a great weekend and a great trading week. In this week's commentary we're going to have a look at the American markets, just get them up to date. There's been an interesting development in one of them and that could certainly give us some clues with the other two. The other thing I'm going to take a look at is the DAX. The DAX has got an interesting key level that it's playing around at the moment and it'll be interesting to see where we can go from there and if that provides us with opportunity. And then I'm going to take a look at a couple of currencies that I think are worth watching for potential opportunities. And lastly, we've got crude as well, which is still lining up after a week's worth of consolidation. So if we start with the American market now, the Dow Jones itself hasn't really presented too much to us because we're still within this overall range that we've been in since basically February. So we're 2 months into this range, or just shy of 2 months. And it's starting to give some clues though that we might see some upside. Now, although this isn't the cleanest, what we do have is the potential of an ascending triangle, sorry. So if we can see a breakout of these levels, then we might start to see momentum, but we are going to have to clear 18,300 roughly. We're just a little bit below that, and then that would be good for some cleaner to the upside. Now, where we might gain some evidence to potentially suggest that that is what might happen is if we look at the Nasdaq. So taking a look at the Nasdaq, as you can see, we've broken these highs last week. Now Thursday into Friday, we then came up and we've made a new high. So what that's suggesting is after consolidating, we're starting to get some upside pressure. So although we were starting to get some potential bias to the downside, that never materialized. And now that the first American markets made this new high, that might create some clues that we might see some more upside in the American markets. If we just take a look at the S&P as well, you'll notice that if I get rid of my drawings, you'll notice that we're back at these highs as well. So the Dow's the only one that's not got back to its highs, but we're definitely seeing some upside pressure. So from the S&P, we could definitely look at considering breakouts to the upside. With the Nasdaq, maybe to get price to come a little bit higher to then consider the pullback. And for the Dow, if we can get back to these highs, then we would look for a breakout north. So from that point of view, we're definitely starting to create a bullish bias now, having had recently a bearish bias which hasn't panned out. So we'll see what comes of that in the coming weeks. Now, I want to then take another look at an index that I don't mention that often, but I'm going to look at the DAX, which is the Germany 30. This is the main index, and this is a really important index for actually the whole of Europe because Germany is such a powerhouse economy-wise. But if we look at it, what we can see is we've been trending up for some strength basically since the start of this year. So we've had this lovely trend up here, but that trend is just showing some signs of failure in the respect that we had this high, we pulled back, we made a new high, but then we came back down to where that previous higher low was. So from that point of view, that suggests this market's no longer trending up. And what we do have, which is really nice, we've got a lot of clean air to the downside. So what would be worthwhile is keeping an eye on that level there, which is about 11,600 approximately, because if we can break those lows, there could be some really nice opportunities for the short. And it might just be that if we take it to the weekly, what we're then trading off the daily or the lower time frame is the pullback principle before it might continue higher as well. So while the pullback's playing out on the weekly, we could look at that from a daily, a 4 hour or a 1 hour, or even go lower for opportunities on a break of those lows. So that's definitely worth putting an alert in and paying some attention to. We've got crude as well. If you remember from last week, I was expressing that crude had broken out and now we're in a position that we're consolidating. So from that perspective, it does look good for some continued upside. So I would look for a break of the highs there, which is about 5,880. If we can break out now that we've cooled off, now that we've paused, it definitely looks good for a possible long opportunity. I'm not interested in the short opportunity because the overall bias of the market is up. And remember, when we're doing our analysis, we're doing two things. We're finding strategy based on setup principles that we've created, tested and run, but we're also looking for probability based around direction, and it's our higher time frames and our main primary markets. These things determine the direction, which means I know which way I'm going to trade and which way I won't trade. So for this point of view with crude, I'm only going to be looking in a long bias. And lastly, just to finish off, I'm just going to pick out two currencies. Now, last week's commentary I covered Euro Pound, and what I was explaining was, although I wouldn't like this from a swing point of view, I did like it from a day trading point of view. So at this moment, I have taken a short on Euro Pound. I'm still in the trade at the moment. It didn't quite get target last week, and we're going to see where it goes from here. It did show some upside, so the momentum wasn't quite there the way I would like it, which is also evidence why I wouldn't swing trade it. But if we can get back down to round about 7100, that's where I'll be looking to exit this from a day tradable point of view. So it has broken down. It's still in flux at the moment, and we'll see what happens with it. And I'll keep you posted on that going into next week. The other market I'm just going to pull up is cable. The reason this is definitely worth keeping an eye on is we've had this long downtrend on cable since basically July of last year, but what we're now starting to see some upside pressure. The reason it would be worth paying attention to right now is we've just come up to the highs from the 18th of March, which is also through this resistance level at the big round number of 15,000. So if we can actually consolidate round about this 15,200 level, there's no doubt we do have some clear air, maybe back up to about here. There is a bit of temporary space in here. The only reason I'm not as concerned about that is we've broken it far more than we've reacted to it, whereas this whole area, we've got quite a strong, thick level of resistance up here. So a possible opportunity would be if we can consolidate to go long there. Might be better from a day trading point of view because it is quite a small gap that we're looking to trade in. So it might be better from a day tradable point of view, but it's certainly worth keeping an eye on. Okay, so that's us for this week's market commentary. I hope you have a fantastic week, and I'll see you in next week's commentary. All the best for now.